Hi friends, today I'm going to talk about smart tax moves for corporations and LLCs. A lot of people have questions about their corporations and LLCs. They're confused. What should we do? Whether we should incorporate LLC, whether we should have corporations, S Corp, C Corp, whether we should file in Delaware, whether we should file in Nevada, whether we should file in California. So, what about foreign investors? What about angel investors? So, a lot of questions do come up with this kind of issues on corporation LLCs. So today I'm going to give some tips on those areas. First number one tip is if you are looking for angel investors, if you're looking for going IPO, if you're looking for venture capitalists, definitely it's important to do a C corporation because they need all those regulations in place, bylaws and everything in place, proper incorporation document in place. So it's better to form in Delaware or better to form in other states. Maybe Delaware they prefer, but Nevada also is good. So do form in the Delaware. But when you form that company in Delaware and you're operating from another state, for example, if you're in California, major decision makers are in California. You have to do a foreign qualification in California, state of California. That's a lot of things. A lot of people do forget they form in Delaware, but they don't make foreign qualification in another state. You have to register in another state to do the proper business in that state because you're operating from that state. You're not operating from Delaware. If you're not looking for going IPO, not looking for venture capitalist, if you're looking just to start a business and it's a franchise business or a retail business, then definitely S corporation makes perfect sense for you. Don't do LLCs because LLCs, of course, it provides better protection, but not meant for running a business. Because if you make a lot of profit in that LLC, you are subject to self-employment taxes on the net profit, which can be substantial. To avoid paying so many self-employment taxes, it's better to do S corporation and run the business in S corporation. Now, there's another way you can do is you can create LLC and then you can convert it to S corporation. So you're best of both the worlds. You have a limited more protection LLCs, and also you have S corporation. You pay less taxes on self-employment taxes. You have to also remember that if you're in California, if you're operating a business in the state of California, California do have different tax regime. For example, for in case of S corporation, you have to pay a minimum $800 tax after second year, not first year. Every year you have to pay $800, and then you have to pay income tax, and you have to pay the California taxes on the net profit. So net profit is if you make more than $800, you pay 1.5% on the net profit. In case of LLC, you have to pay, in addition to $800, you have to pay one more thing, which is franchise fees on the gross income. So if you're making, let's say, $1 million, you pay $2,500 LLC fees. It's based on gross income, not on net profit. So that's also important consideration, and that LLC fees goes up to $11,000. So you have to do comparison between tax you pay on the net profit for S corporation versus California LLC fees, which makes sense for you. That you have to go to a tax professional and get the computation done and form the regular entities. So we have talked about the incorporation. Then we talk about the operational side, which is a smart move for corporation and LLCs. Let's talk about the second point, that is medical insurance. A lot of people are worried about medical insurance, whether we should have do a formation LLC, whether do S corporation or whether do C corporation for medical insurance purposes. If you're looking only for medical insurance benefit for you and your family and your good income, look for C corporation. Why? Because C corporation can provide those benefits. It's not goes to your personal return. Company can't provide those benefits. And if you don't have eligible employees, you are the only people running it, then it's better to do C corporation. Now in C corporation, is one more advantage is you have a federal of 21% tax rate, not 30%, not 40%. And California also is limited to 8.84%. So if you're not looking to take money out from corporation, you have limited profit, and you want to provide medical benefit, C corporation scores over S corporation and LLCs. Third thing is you have to understand is if you want to take money out on a regular basis, which is better one. So in that case, of course, C corporation doesn't make sense because in the C corporation you have to pay taxes, but on personal side you have to pay dividend tax and California taxes if you take money out. Which are better? The better ones are S corporation and LLCs. Now, which one should take, S corp or LLCs? So if you're making a lot of money, like I said earlier in the first point, then LLC should be converted to S corporation. S corporation makes more sense, so S corporation should be formed. If you have limited profit, if you're not making much profit, what is the wavelength of profit? So if you're making, let's say, 250,000 or more, S corporation makes sense. If you're making 250,000 or less, LLC makes sense. Now, if you take distribution on a regular basis, and you don't want to run more payroll, then definitely LLC makes more sense. What about a qualified business income deduction, QPI deduction we call it? In that case, S corporation makes more sense than LLCs, because you can do a reasonable payroll, avoid self-employment taxes, and take the QPI deduction on net profit, subject to overall taxable income limit. So these are important aspects one should take into consideration while doing S corp, LLC, or C corporation. If you want to do payroll for your family members, S corporation makes more sense than LLCs. If you want to own real estate, then LLC makes more sense than S corporation. So these are the factors one should consider while deciding about LLC, S corp, and C corp. Do talk to your tax professional and make a smart move. This can save a lot of dollars, a lot of money for you, and can avoid a lot of audit issues later on. Thank you.